Happy Friday, Eric Bible with the Bible team at Neil Home Loans. What a Friday. What an interesting week. A lot on deck. And today could have been either happy Eric or it could have been not so happy Eric. And we'll get to that here in a second. But also today I want to cover some interesting data around pending home sales. Again, continuing to push the narrative that home prices are holding strong and demand is robust. And as rates fall, we're going to continue to see home prices accelerate. And then lastly, I want to close with buy before you sell. The all important locked in customer client that needs to sell in order to buy, but is apprehensive for a number of reasons. So a lot to unpack today. We'll first start with mortgage interest rates starting off this morning at 7.52%. And really, this is on data that came out yesterday, which created the anxiety leading into this morning PCE, personal consumption expenditures report, which is ultimately the Fed's favorite gauge of inflation, as it shows true costs that consumers spend for goods and services. So yesterday, Thursday, we received a quarterly reading of this number, which showed quarter over quarter those costs in real time. It was a miss. And with that, it portended the expectation for today's report to be also a miss, which put the markets on high alert, pushing mortgage rates to that 7.52% as we see market open this morning. So here, leading into this morning's 8:30 Eastern Time, 5:30 Pacific release of that report, tons and tons of anxiety. Well, the year over year number stayed at 2.8%, but the biggest was the month over month reading. As markets were expecting 0.3%, essentially cost to increase on a month over month basis by 0.3, and we got just that. However, why there was so much anxiety and why this could have gone in either direction, given the quarter over quarter reading yesterday, was if we saw that come in at 0.4, 0.5, which a lot of pundits last night were advocating for, or anticipating for, I should say, it could have put the narrative back that, hey, we're not making progress on inflation. And yes, now the Fed likely cannot cut rates until possibly next year. Well, today, that gives more credence that, yes, inflation is still high. I do not want to downplay that. But we are seeing incremental progress on inflation. We're holding the line. So here, it would be interesting to see where Fed futures, indicators for future rate cuts, where these start to adjust based on today's data. And keep in mind, next week, the Fed will meet for their May meeting, start on Tuesday. With that, we do not expect any rate cuts, rate hikes next week or into May. Likely would be June if anything were to happen. But this gives some new data for the Federal Reserve to go into that meeting with. So hopefully the markets can get some very interesting info back from. So with that, definitely something we're going to continue to monitor. But as we start today, there is definitely room for celebration given how the markets saw yesterday. With that said, pending home sales. So for the month of March, we saw yet again home sales blow past expectations. Existing home sales rose, which again took them out of the deficit we were. So in turn, we're flat on a year over year basis, which is great given in February we were down 7%. And keep in mind, this is in the backs of incredibly elevated interest rates. Home prices continue to accelerate. And with that, the expectation as more inventory comes online, rates actually normalize. What happens with the existing home sales? We expect that to continue to accelerate, and in turn, home prices accelerate behind it. So again, the message we need to continue to drive to our consumer is take action now. We will always be in a position to restructure that debt, refinance, when rates do normalize, but you will never be able to reset the home price unless you buy again. The other component, and we're commanding a tremendous amount of questions, inquiries around the ability to buy before you sell. And yes, you've all heard of the bridge loan. And yes, in most instances, the bridge loan is not the best option as the cost associated to it. we have access to some of the most cutting edge products that actually put transactions together. We've all received that call. Hey, I've outgrown my home. I need to move. However, my down payment is tied up in the home. Therefore, I have to sell before I can do anything with the new home. Oh, but wait, there's no inventory and I don't want to be homeless. Very reasonable request, which in turn creates stagnation within the market. We have options that are working that allow the consumer to purchase prior to selling and know the costs are not exorbitant. The ability to extract the equity up front and purchase the home prior to closing on their departing. Significantly less expensive than that of a traditional bridge. If you find yourself running into clients that fit this mold, because there are tons of them out there, I want to speak to you, as we again have a tremendous program, access to a number of different options that alleviate this pain point. With that said, as always, make it a fantastic Friday and an even greater weekend. Thank you.